Welcome to the Japan Stock Podcast. Today we are heading into the mountains, quite literally.
We are.
But before we put on our hard hats, I came across a Japanese word in our prep materials that I need you to explain. It sounds pretty intense. Senmitsu.
Ah, yes. Senmitsu. It's a classic mining term.
Okay.
If you just look it up, in a regular dictionary, it can sometimes mean a liar. Someone whose word is only true, say, 3 times out of 1,000.
That does not sound like a great start for a business deep dive.
No, not in most businesses. But in the mining industry, senmitsu isn't an insult. It's a statistical reality. It literally means 3 in 1,000.
Okay, so what does that actually mean for a company digging stuff out of the ground?
It means that for every 1,000 spots you explore, for every mountain you survey for copper or gold or whatever, you'll be lucky if 3 of them, just 3, ever become profitable commercial mines.
3 out of 1,000. So you're dealing with a 99.7% failure rate.
That's it. You spend millions, you dig a lot of empty holes, and you move on. It's a business built on failure, high stakes, and then just occasionally a massive reward.
That's a terrifying business model. And yet the company we're looking at today, Nittetsu Mining, has been playing this game for over 80 years.
They have, and if you just glance at them, tickers is 1515. By the way, Nittetsu Mining looks like a very traditional, maybe even a little boring domestic firm. Most people in Japan think of them and just picture dusty limestone quarries.
Right, the stuff for concrete and steel. Not exactly a hot tech stock.
Far from it. But the reason we're digging into them today is that the boring image is really deceptive. Underneath all that dust, this company is going through a huge metamorphosis.
How so?
They're shifting from being the king of limestone here in Japan to becoming a global copper player.
And the stock price does show something's been happening. It's up, about 2.5 times over the last decade. But here's the part that gets me, and I want to really unpack this. The market still values them at less than their assets.
Exactly. They're still struggling to get that price-to-book ratio, the PBR, above 1. The market is basically saying, you're worth more dead than alive.
Which is harsh.
It is.
Yeah.
But they just made a move just this February on their dividends that really turned some heads. A move that suggests they know how painful the wait is for investors, and they're willing to pay you to be patient.
Okay, so that's our mission today. Figure out why this rock-digging company is betting its future on South America and what this dividend floor is all about.
Let's do it.
To really get where they're going, I feel like we have to look at where they came from. This isn't some new company. They've got a serious history, right?
They do. Nittetsu Mining was founded way back in 1939, and the name Nittetsu is a dead giveaway if you know your Japanese industrial history. They were spun out of the mining department of Japan Iron and Steel.
Which is now the giant Nippon Steel.
Precisely. In 1939, they were the engine room. Their job was to feed the steel mills with coal and iron ore. If they stopped, the whole industrial machine went cold.
But Japan doesn't really mine much of that anymore.
Not really, no. And that gets to the absolute core psychology of a mining company. It's an industry of depletion. Every day you operate, you're one day closer to your mine running dry and you going out of business.
That's a stressful way to start your morning.
It forces a pivot or die mentality. The coal mines closed, the iron ore became too expensive to dig here, Nittetsu had to keep reinventing itself, and that survival instinct creates a very specific culture. They have this philosophy called Ichizan Ika.
Ichizan Ika. What's that?
It translates to one mountain, one family.
That sounds a little like a corporate slogan you'd see on a poster.
It does, but in mining, it's deadly serious. When you're deep underground, your life is in the hands of the person next to you. One mistake, and the mountain doesn't care who's who. It creates this intense loyalty.
And I'm guessing that also makes them very conservative.
Extremely. You don't take wild risks when it's your family's safety on the line. This is why you'll see them act very deliberately, make very safe bets. They're always preparing for the worst-case scenario.
So if the family business isn't coal, what does this portfolio of rocks look like today?
Well, you have the safe side, the cash cow, limestone.
The limestone fortress, as you called it.
That's it. They have the #1 market share in Japan for limestone supplied to the steel industry, over 40%.
I always think of limestone for cement, but it's that important for steel.
It's absolutely crucial. You need it in the blast furnace to pull out all the impurities from the iron ore. Can't make good steel without it. It's not glamorous, but for them, it's just a steady, reliable source of cash.
Okay, so that's the safe bet. What's the other side of the coin?
That would be the metals division, mostly copper. This is the growth engine. This is where all the risk and all the excitement is. They use the boring limestone money to fund the high-stakes hunt for copper, mostly in South America.
So the boring rocks pay for the exciting rocks.
That is the business model in a nutshell.
And how has that model performed recently? The stock chart is a bit of a roller coaster.
Very cyclical. They had a massive spike in 2022. Operating profit shot up 80% that year. Wow.
Yeah, copper prices were flying high. Limestone demand was recovering post-COVID. It was, a perfect storm for them.
But looking at the forecast for the current fiscal year, things seem softer. A dip in operating profit down to around 7.4 billion yen.
Right, and this is where you have to look past the headline number. The dip isn't because the business is weak. It's because they're spending a huge amount of money.
On what?
On something called the Known 3 vertical shaft at their main limestone mine, Torigatayama.
Sounds like something from a spy movie. Why is digging a big hole hurting their profits so much?
Well, think about an open pit mine. For decades, you dig down, put the rock in a truck, and the truck drives up a long, winding road to get out. As you go deeper, that drive gets longer.
So more fuel, more time, more cost.
Exactly. The costs just keep creeping up.
Yeah.
So what Nittetsu is doing is building a giant vertical shaft, like an elevator, straight down the middle. They just dump the rock down the hole, it lands on a conveyor belt at the bottom, and zips out of the mountain.
They're replacing trucks with gravity. Pretty much. But building that elevator costs a fortune, and the depreciation of that cost is what's hitting their profit and loss statement right now.
So it makes the numbers look bad today.
But once it's done, their transport costs will plummet. For decades, they're taking a hit now to guarantee they are the low-cost producer for a generation.
It's an investment, not a loss. That makes sense. It's a classic J-curve.
Exactly. And their own midterm plan projects profits bouncing back to nearly 13 billion yen by fiscal 2026.
And a big piece of that 2026 story isn't just the limestone elevator. It's what's happening on the other side of the world.
This is where we get back to the Zenmitsu gamble, Chile. It's the absolute heart of their growth strategy.
Okay.
They have the Atacama copper mine, which is already producing. But the real one to watch, the one that keeps investors up at night, is the Arqueros copper mine.
Arqueros, that's the new one.
Yep. It's in development, and it's supposed to start operating in fiscal 2026. If that mine comes online, on time, it's the main reason for that big profit jump they're forecasting.
I saw a note about how they're approaching these projects now. It seems like their strategy has shifted.
It has. They used to be greenfield purists.
What exactly does greenfield mean?
It means you start from absolutely zero, you find a mountain in the middle of nowhere that's never been touched and say, I think there's copper under here. You do all the exploration, all the permitting, everything from scratch.
Which must take forever.
A decade, sometimes two. And remember, it fails 99% of the time. It's a huge long-term gamble.
So what are they doing now?
They're being more pragmatic. They've started doing brownfield projects, too.
A fixer-upper, basically.
That's a great way to put it. You buy into a project that's already been discovered, or you develop near an old mine where the roads and power lines already exist. It's less risky, and crucially, it's much faster. It's a sign they know they can't wait 20 years for the next big score.
Before we move on, there's a smaller piece of their international business in Asia. Something to do with water treatment.
Politetsu.
Politetsu. Sounds like a character from a video game.
Propols. It's an iron-based inorganic coagulant.
Okay, you're going to have to translate that for me.
It's a chemical. You add it to dirty industrial wastewater, and it makes all the sludge and gunk clump together so you can easily remove it.
It cleans the water.
Cleans the water. And they're building factories to make this stuff in Taiwan and Vietnam.
Why there, specifically?
Because environmental rules in Southeast Asia are getting much stricter. Factories can't just dump their waste into the rivers anymore. They have to treat it. And Nittetsu is right there, ready to sell them the solution. It's a small but very smart, high-margin business.
Right. Okay, let's go deeper. Let's talk about the hidden business logic. What are the 2 or 3 levers that really determine this company's future?
Driver number 1 is that limestone fortress we talked about, Torigatayama.
The one with the new elevator shaft.
Right. But the key concept here is the moat. Limestone is heavy and cheap, so transportation is everything. By building that shaft, Nittetsu is making it almost impossible for any competitor in Japan to beat them on price. They're locking in their cash flow for decades.
It's a defensive move to protect the cash cow. Make sense? What's driver 2?
Copper price sensitivity. This is the big one they can't control. Nittetsu is a price taker.
They just have to accept whatever the global market is paying for copper.
Exactly. They could be the most efficient miner on the planet, but if the price of copper falls 20%, so does their revenue.
And with the new Arqueros mine set to open in 2026, they're massively increasing their exposure to that price.
They really are. Their success in 2026 won't just depend on if the mine opens, but on what the global price of copper is that year. The long-term trend looks good. EVs, AI, data centers all need tons of copper. But if there's a global recession in 2026, that shiny new mine becomes a very heavy weight.
High risk, high reward. What's the third driver?
This one is a little counterintuitive. I call it the renewable energy ROIC trap.
ROIC. Return on invested capital. Why is it a trap?
Because Nittetsu is developing a geothermal power project. Geothermal is fantastic. It's a clean baseload power that runs 247.
Sounds great. Where's the trap?
It takes years, maybe a decade, and tons of money before you generate a single dollar of revenue.
So you're investing all this capital, but the return is zero for a long time.
Exactly. Your return on invested capital, your ROIC, looks terrible. The I in the denominator gets bigger and bigger, but the R stays at zero. An analyst just looking at a spreadsheet would say management is being inefficient with capital.
But in reality, they're building a future cash machine.
Correct. Once it's running, the Earth's heat is free. It's pure, stable profit. They are actively choosing to sacrifice today's metrics for stability in the 2030s.
It all comes back to that one mountain, one family long-term thinking.
Which brings us to the big point of friction. The shareholders.
Right. The stock trading at, what, 0.6 times book value?
Which is the kind of thing that has the Tokyo Stock Exchange breathing down your neck. Investors were getting frustrated. They see all this cash going into long-term projects, but the stock price just sits there.
And their old dividend policy was apparently very confusing.
It was a dividend on equity formula that was just impossible for a normal person to predict.
But then came the update in February.
A huge update. A game changer for them, really. Starting this fiscal year, they introduced a fixed minimum dividend.
A floor.
A hard floor. 170 yen per share, no matter what.
Why is that specific detail, the floor, so important?
Because for a cyclical mining company, dividends usually vanish when commodity prices crash. When copper is high, you get a big dividend. When it crashes, you get zero. The shareholder shares all the risk.
Ah, I see.
But by setting a floor, Nittetsu is sending a powerful message. They're saying, our limestone business is so strong that even if copper collapses, even if the market turns, you will get paid.
It's like income insurance for an investor.
It totally changes the proposition. It removes that downside risk. It makes it a yield play, not just a risky commodity bet.
That's a very confident signal to send.
A very confident signal. And on top of that, they kept the 40% payout ratio. So if copper booms, you get more than 170. And they announced a nearly 5 billion yen buyback.
And they're cleaning up the balance sheet, too.
Yes, getting rid of those cross-shareholdings, those buddy-buddy stocks that Japanese companies hold in their partners. It just ties up capital. They're selling them off to become more efficient.
So if we pull this all together, Nittetsu Mining feels like a company with two very different personalities.
It's a bipolar company, in the best sense. You have the unshakable, steady foundation of domestic limestone, the reliable parent putting food on the table.
And paying for the new elevator.
Exactly. And then you have the adventurous, risk-taking side, the South American copper business, chasing that Senmitsu jackpot.
And right now, we're in the waiting room for that jackpot.
We are. It's a heavy investment phase. The limestone shaft, the Arqueros Mine, the geothermal plant, all of that spending makes current earnings look soft, but the payoff is scheduled for 2026.
A classic wait-and-see situation.
And the company knows it. That's what the 170 yen dividend floor is all about. It's patience money. They are literally paying you to wait for the Arqueros mine to come online.
So I guess that leaves our listeners with a final question. Nittetsu Mining has built a dividend floor to keep you safe while you wait. They have the limestone to keep the lights on. But the real story is all about 2026.
That's the whole game right now. When they flip the switch on that Arqueros mine, will the world be in a copper boom or a bust?
The question is, are you willing to wait 2 years to see if the Senmitsu gamble finally pays off?
It's still a gamble, but at least now you get paid to wait and find out.
Something to think about. Thanks for the deep dive.
Anytime.